Hi everyone and welcome to this video where we will be walking through how to do some journal entries for a perpetual inventory system. Let's go over to the computer and look at this together. On your screen we have a problem here. We have a company using a perpetual inventory system, and the company began its fiscal year with inventory of $267,000. There were purchases of inventory on account, and that's important. On account is telling you the if we are the buyer, if we're the company buying the inventory from a supplier, this indicates to us that we didn't pay cash. We made an arrangement with the supplier that we would pay later. They would bill us later. Usually, these things, the supplier will send us an invoice and say, pay us in 30 days. So when we are the buyer and we buy something on account, we have something due. We have a liability. We call that accounts payable. If we do this for a customer, on the other hand, then we have an account receivable. So in this case, we are the buyers of the inventory, so we have an account payable. So purchases of inventory on account during the year totaled 845,000, and inventory costing 902,000 was sold on account for 1,420,000. What this is telling us is that we paid $902,000 for some inventory in the past, and we resold it to a customer for 1,420,000. And the difference between 1,420,000 and 902,000, it represents profit. We took a product from our supplier and we added a markup to it, and then we sold it to customers for 1,420,000. The problem here is asking us, and the solution needs to be, we need to prepare the journal entries to record these transactions. So the transactions they're referring to are, one, the purchases. So I'm just going to mark that in red. And two, we have to record the sale. So we have to record two journal entries, one for the purchase of inventory from the supplier and one for the sale of inventory to our end customers. So let's tackle the first one. So let's say the first one is going to be debit inventory, because our inventory is increasing for the purchase, and the amount is here $845,000. 845. And remember, they tell us in the problem that this inventory we bought the company bought the inventory on account. We didn't pay cash, so we're going to credit accounts payable for 845,000. And that is it for the purchases. So we did that journal entry. Now the second journal entry here is we have to record the sale. Anytime that you have a sale, there is always two journal entries. And the reason for that is because you're charging the customer one price, and the value of that item that you sold to the customer has a different price. We are charging the customer more than we paid to buy this product from a supplier, or more than we paid to make the product if we're a manufacturing company. We're always trying to sell things at a profit. So as a result of that, we have a price that we charge to the customer that is higher than the price it cost us to make the inventory. And we have to deal with these two separate amounts in two journal entries. So remember, every time we make a journal entry for a sale, there is always two entries. Okay. The first entry will be to record the sale price. And like our purchases, we told the customer, pay us later. In the previous one, in the purchase problem, or the purchase journal entry here, our supplier said, pay us later. And so that resulted in us having a liability accounts payable. Now we are extending that same courtesy to our customer and saying, hey, you can pay us later. So we don't have a liability accounts payable. What we have here is an amount owed to us from our customer. We have an accounts receivable. So we're going to debit accounts receivable. The amount the customer owes us is 1,420,000. And we are going to credit sales revenue. because this represents revenue to us in the income statement, 1,420,000. Finally, the second journal entry for this sale will be a debit to cost of goods sold, which is an expense in the income statement, and a credit to inventory. We need to reduce our inventory because we sold some of it. It no longer belongs to us, it now belongs to the customer. Now, I'm going to leave this to you to put in the amount. All right, so you need to figure out what amount should go in here for the second part of this sales entry. And what I'd like you to do is comment below this video and with the amount that should go into this second journal entry here. What amount should you put in for cost of goods sold and inventory? So I will look at the replies, and if you get it correct, I will reply to you indicating that the number you posted was correct. So I hope this video helped you understand inventory journal entries a little bit. Thank you very much for watching, and I'll talk to you soon.